Welcome to the Phuble podcast, the podcast where we talk about all financial markets around the world. I'm Phil Monvianis, and this week we are in Madrid. So we will be discussing the Spanish stock market, Spain's government bond yields, and also the Spanish economy. Here, there are three major indices: the IBEX 35, the IBEX Medium Cap, and the IBEX Small Cap. The IBEX 35 is a benchmark for the Madrid Stock Exchange. The IBEX 35 has the 35 most liquid securities traded on the Spanish market. It is specifically related to the Madrid Stock Exchange General Index. The IBEX Medium Cap consists of the 20 companies with the highest market cap here on the Spanish stock market, not existing in the IBEX 35, and the IBEX Small Cap Index consists of the next 30 largest companies based on free float market capitalization, also not listed on the IBEX 35. All these three major indices basically represent the Spanish stock market here, and for the past year they have all been relatively stagnant and have a slight decline. However, in the past few months, they have actually been increasing though. Going on government yields, the short-term Spanish government yields have been negative like the rest of Europe. The long-term yields are positive, but are trending downward, which means money is flowing out of stocks and into bonds. A few metrics from Spain's economy. Spain's GDP in 2018 was 1.4 trillion US dollars. GDP this year is expected to expand 2.2% for full year 2019. Quarter two GDP was 0.4% quarter over quarter, but 0.5% was expected in Q2. Q1 GDP was 0.7% quarter over quarter. Quarter two year over year GDP was an increase of 2.0%. Now, Spain's GDP is increasing, but unemployment still remains very high at 14.02%. That was for quarter two of 2019. That is around 3.23 million people who are unemployed here in Spain. Unemployment has been decreasing drastically over the past few years, and actually 14.02% has been the low of recent. Bankruptcies decreased in quarter two of 2019 to 1,588 companies. In quarter one, it was 1,648 companies. Consumer sentiment indexed at 80.7 for September, which was down from the previous months. Consumer sentiment has been decreasing since June. At June, consumer sentiment was indexed at 102.3. Business confidence for September declined to a negative 5.3 rating. In August, business confidence was at a 1.4 rating. Economically speaking, Spain is improving, but based off of these sentiment numbers and the still high rate of unemployment, also the fact that money is flowing out of the stock market into bonds does signal, once again, an economic slowdown like the rest of Europe. However, as unemployment decreases, Spain will actually be in a fantastic position to increase economically. That's all for the Phuble podcast. Thank you for watching and happy investing.